Once upon a time in the bustling city of New York, there lived a young man named Alex. Alex was always fascinated by the world of finance and had recently come across the concept of Forex trading. Intrigued by the idea of trading currencies from different countries, he decided to dive into this new adventure. Alex started by learning the basics. He discovered that the foreign exchange market, or Forex, is the largest financial market in the world, with a daily trading volume exceeding $6 trillion. The allure of potentially high returns captivated him, but he knew that it came with significant risks. One evening, after weeks of research, Alex decided it was time to start trading. He set up his trading account with a reputable broker and began with a demo account to practice without risking real money. He learned about various trading strategies, such as trend following and breakout trading, and familiarized himself with technical analysis tools like moving averages and Bollinger Bands. Alex also learned about fundamental analysis, understanding how economic indicators, interest rates, and geopolitical events impact currency values. He subscribed to financial news websites and followed central bank announcements closely. After months of practice and studying, Alex felt ready to trade with real money. He deposited a modest sum into his trading account and started small, trading the major currency pairs like EUR/USD and GBP/USD. His first few trades were a mix of small profits and losses, but he kept his emotions in check and adhered to his trading plan. One day, Alex noticed a significant trend developing in the EUR/USD pair. The European Central Bank had announced a major policy change, which Alex anticipated would strengthen the euro against the dollar. Confident in his analysis, he placed a larger trade than usual, carefully setting his stop loss to manage risk. For the next few hours, Alex watched the market intently. The euro began to climb, just as he had predicted. His trade moved into profit, and his excitement grew. However, remembering the importance of discipline, he didn't let his emotions take over. He decided to secure his gains by adjusting his stop loss to a break-even point. As the day progressed, the euro continued to strengthen, and Alex's trade yielded significant profits. He closed the trade, satisfied with his well-earned reward. This successful trade boosted his confidence, but he remained humble, knowing that the market could be unpredictable. Over the next few months, Alex continued.